Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Ceresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to your ISE Equity Index Outlook for September 20th, 2010. This is Patrick Ceresna. As always, we start off with the S&P 500 using that SPDR exchange traded fund symbol SPY. The market has spent the week bouncing its head on the 113, 114 focal point support overhead resistance level up on top. Now, even if we have a temporary break above that zone, where all our measured moves are indicating a move maybe up to about the 116 level max. And at some stage between now and then, whether it comes off of the current level or whether maybe off another 2 points higher, we're anticipating there to be some sort of a profit-taking cycle. The key thing during that profit-taking cycle is that if it's no more than maybe 2 or 3 days in duration and doesn't do any major technical damage beyond, let's say, below the 110, 109 level on the downside, subsequently finds a good base and then starts reversing back, then that could actually just be the springboard from which another leg higher actually begins. So that just because we see some selling early this week would not make us bearish initially. The only thing that would immediately revert us to a number of bearish scenarios would be if we saw an immediate break below about the 110, 109 level with a little bit of velocity and some aggressive selling, particularly driven by a theme or some sort of news catalyst that brings new waves of selling. So we'll be watching how the price action develops this week. Next here, I want to take a look at the ISE U.S. Regional Banks Index, which is a symbol JLO. We've seen a little bit of a continuation rally. We widened that support resistance focal point to about the 22-23 range. Still a flagging formation holding all retracement zones. At this juncture, if the whole market corrects, the JLO could very easily come back down and retest towards the previous lows for something that would be similar to a double bottom along the downside. We think that overall there's a good chance that the regional banks have seen their lows. Maybe just a basing period has to actually develop before it really has a robust follow-through rally. Nonetheless, it would be an accomplishment if the bulls were able to get this all the way back to the 24 plus range on the upside. If they were, all sell-offs will probably become buying opportunities. So we're going to watch how this develops this week. Next here, I want to take a look at the ISE Index, which is a symbol SIN. This is an index of all the casino, tobacco, and distiller companies. Again, we see that consolidation right in our marked 114, 115 focal point that we've been watching. Really, though, there's been a lot of relative strength in these casino stocks, and at this juncture, just like the whole market, there's always room for there to be a couple-day profit-taking cycle. But if they're able to get above this 114, 115 area, there's a number of upside measured moves that target even as high as the 119 to 122 area. So there's room for another full leg higher if it can get above this overhead resistance here. Again, though, that may first come with a 1 or 2 day profit-taking cycle, and then that acts as a springboard to launch to those upside targets. Next here, I want to take a look at the ISE Home Builders Index, which is symbol RUF. Here, we've had some very good basing along this 8 to 8.25 area. Now starting to look like a little bit of a double bottom. We tightened up the overhead resistance to about the 9.25, 950 on the upside. At this juncture, we now have to consider home builders to be range bound, not necessarily bullish yet. But so long as this wave of selling does not make it all the way back down to the previous lows of 8 to 8.25, then you will see more accumulation occurring in this as people will play a home builders index for a rebound after such bearish sentiment toward this entire sector. Again, we'll want to see the price action confirm. We'll do that by suggesting that if we don't want to see it come back to retest those 8 and 8.25 area, and subsequently want to see a technical break above 950 to confirm an upside breakout. Next here, I want to take a look at the ISE Natural Gas Index, which is a symbol FUM. Similar to what we see in the regional banks, the last wave of rallying here still has only made it up to the retracement zones from the last wave of selling. There's relative weakness in the natural gas index, no different than the regional banks or the home builders. But at this juncture, if the whole market goes through a 1 or 2 day profit-taking cycle, we could see these come back down to retest some of the previous lows. But again, just like the home builders, so long as the selling doesn't gain any significant momentum on the downside and is actually contained above this 89.91 zone, actually could be a springboard from which another move higher can actually occur. So it's all going to be about the degree of the selling here. Finally, I want to take a look at the ISE Mini FTSE 100 Index, which is a symbol UKX. We had a bullish breakout above the 540-545 focal point 2 weeks ago, and essentially was seeing some initial follow through. There's a number of from this flag right here. The measured moves are already complete on the minimum side of the target, but there's room for this to come all the way up to the 565-570 area, or even if they target a retest of those previous highs, we could see a move even as high as the 580. There probably will be a little bit more upside here if the whole market goes, but at some stage, just like the other markets, we're looking for a multi-day corrective pattern. We have a belt hold line candle reversal right here. Be very interesting to see whether that was just a 1 day blip or whether that actually marks the reversal on the downside. If we do have more than 1 day of selling here, that 540-545 will be the initial line in the sand where they're going to try to hold support line. Even a very temporary break, let's say to 535 and then back above 540 would actually not be even a major violation. That would still fulfill the pullback criteria for another spring higher. That was your ISE Equity Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.